U.S. and European government bond yields jumping this Thursday, with the yield on U.S. 10-year Treasury notes rising to the highest in more than 25 months. This definitely having an impact on gold. We have Bill Baruch of iiTrader with us on the line. Bill, thanks for being with us.
Thank you for having me today.
So this Thursday, Bill, we saw gold sell off following another upbeat economic report. Then there's all these talk about yields. What are you seeing today?
Well, what I'm looking at right now are yields, and that's really what everybody who's invested in gold has to take a look at. Yields, are, especially the 10-year here in the U.S., are making new highs, the highest level since July of 2011. And as well, globally, yields are rising. The German 10-year hit 2% today, and that's the key. Is rates are rising around the world globally, and global growth. It's going to make a very difficult atmosphere for gold.
Bill, do you know how long this might last for?
Well, we still have a very important jobs report tomorrow. The nonfarm payroll, the official data, comes out here in the U.S. That may slow down the selling that we're seeing today. We're looking at a major level at 1352. If we do close below there, coupled with a better than expected jobs report tomorrow, we could see gold within a trade session or two test 1300 ahead of the September FOMC meeting, which is the 17th and the 18th, which all eyes around the world will be on.
So we've started the month of September. Bill, do you think there's a renewed energy entering the commodity space?
Oh, yes, of course. I mean, the energy has never left. I mean, there's always volatility in the market to capture. I mean, silver, last time I was on here, we put out a mid-24 level target. I mean, we're testing 23 right now. The markets have great volatility, especially if you're looking at the market technically. Our top side target in gold was 1422.30. We got just above there. But if you're looking at the market technically, you digest the fundamentals and you get the direction, there's always a place for commodities in an investment portfolio.
So you said you're following the yields here, Bill. How do you play the market? How do you play the metal side?
Well, the metal side, if you see the better than expected jobs report tomorrow and it closed below 1352, you have to be looking to sell gold. If you're long gold and physically, you got to look to hedge it, which is something we do help clients here at iiTrader. Silver as well. The market actually led the sell-off yesterday and was down. Gold started a little bit later to the party, but once it closed below 1400, it lost a lot of its mojo. And again, some of these technical levels are going to be very important. And if in the longer run here over the next week or two, if you see a break of 1270 and gold, then it could be the breakout into a new bear leg and test new lows on the year.
Bill, you mentioned 1270 for gold. Let's recap some key numbers you're looking at here for gold and silver.
Well, gold is that 1270 level. If we close below there, something that could really cause that to happen is the FOMC meeting. And then actually we do see a taper of the $85 billion in bond purchases that we do see a month. If that happens, a new bear leg will start and likely test through that 1180 level. $1,000 could easily be in the cards if this market is digesting higher yields around the world. The one thing that can keep gold in check is gold in yen terms. Just to throw that out there real quick, yen is down and they're not letting up on their stimulus quite yet. So they could be forced to if global yields continue to rise. But right now, if you look around the world, again, the German 10-year higher, the U.S. 10-year higher to the highest level since 2011. This is going to make it a very difficult atmosphere to be long gold. Silver as well. We're looking at the 2250 target that we are pretty close in testing right now. We're holding $23. So that's going to bring in a little bit of support. I wouldn't be surprised to see that test that overnight tonight and into the non-farm payroll tomorrow. As well, the dollar index is something you got to keep an eye on because these metals and commodities are all priced in dollars. So the dollar is heading and testing this 82.71 was the high today. And what we're looking at is 83. If we get above 83, commodities are going to take it on the chin a little bit and start to move lower.
Bill, did you just say $1,000 gold could be a possibility here?
It really could. If we follow through from this FOMC meeting on September 17th and September 18th, and there actually is a taper, I don't think a lot of it is priced in. I think a lot of investors in gold found this at a very attractive levels in the 1200s, and then from there you're able to find value in this market in some of the longer term. But if we follow through with the taper and we get some close below some key levels, what you're going to look to see is just people ask to get out of it, and there's going to be a lot of selling. And again, that close below 1270 will reignite a new bear leg down.
Wow, that would be quite a correction, Bill. Thanks for your thoughts.
You're welcome. Thank you.
And thanks for watching this edition of Kitco News. Email us, newsfeedback@kitco.com, or follow me on Twitter @Daniela Camboni. Thanks for watching.